Welcome to your business news update. I am Oniye Shukra. We'll begin with encouraging figures from Nigeria's tax sector. Nigeria's value-added tax revenue rose to 2.42 trillion in the first quarter of 2026, reflecting improved tax collection and increased economic activities across various sectors of the economy. The figure is one of the strongest quarterly VAT performance in the recent years and signals growing government effort to improve compliance and expand the tax base. For many analysts, this is more than just a number. The increase in VAT revenue suggests that more businesses are participating in formal economy and more transactions are being captured by the tax system. Experts say the additional revenue could provide government with more resources to fund critical sectors such as education, healthcare, transportation, and infrastructure development. Staying with the economy, Nigeria's external trade performance has also delivered positive news. The country recorded a trade surplus of 7.55 trillion in the first quarter of 2026, meaning the value of exports exceeded imports during the period under review. The surplus was largely driven by earnings from crude oil exports and supported by contributions from non-oil productions. Now, what does that mean for an average Nigerian? Economists say healthy trade surplus can strengthen external reserves, improve investor confidence, and support exchange rate stability. They add that if sustained, the development could contribute to the broader economic growth and provide a stronger foundation for long-term recovery. In another development, discussions continue over new tax recommendation for Nigeria. The IMF has proposed additional tax measures, including possible adjustment to telecommunication and fuel-related taxes, as part of efforts to improve government revenue generation. However, the recommendation have generated mixed reaction. The Center for the Promotion of Private Enterprise and other economists have cautioned that introducing new taxes at this time could increase the cost of doing businesses and place additional financial strain on households already facing inflation and rising cost of living. The debate once again raises a familiar question. Should government increase taxes to raise revenue or focus on expanding economic productivity and improving tax efficiency? And on the international scene, global oil markets are responding positively to easing geopolitical tension. Brent crude prices dropped below $85 per barrel following reports of peace agreements between the United States and Iran. The decline in oil prices have lifted market sentiment, with investors expressing optimism that reduced tension could contribute to greater stability in global energy markets. Analysts say lower oil prices may also ease the inflationary pressures in several economies by reducing energy and transportation costs. For an oil-producing country like Nigeria, lower crude prices present a mixed picture. While they can reduce global inflation, they may also affect government revenue if prices continue to decline. And that's your business news update today.